this video, you will learn the important information on day trading with the broker Fidelity Investments. So this video is going to provide information on Fidelity Investments and day trading in particular, and the pattern day trading guidelines. In addition, this video is also going to focus on some frequently asked questions regarding the process of day trading with Fidelity. Fidelity Investments is one of the top online stockbrokers and also has a top research software for day trading, including the Fidelity Active Trader Pro software. In addition to Active Trader Pro, Fidelity has a robust stock screener to help identify investments to day trade, and it has updated charts and stock quotes. However, there are federal SEC guidelines as well as Fidelity broker rules that traders must follow. This video will highlight all you need to know about day trading with Fidelity Investments. Fidelity offers $0 commission trades, which is absolutely necessary for day trading. In addition, it has pre-market hours from 7 a.m. to 9:30 a.m. It also has post-market hours from 4 p.m. to 8 p.m. Eastern Standard Time. So what exactly is day trading? Very simply put, day trading is a short-term investment trade of the same security within the same calendar day. This includes pre- and post-market trades. Investments such as stocks, ETFs, bonds, and even crypto can be day traded. If you decide to execute multiple orders of the same security and trade them within the same day, that also will only count as one stock trade. For example, if you bought Apple stock during the pre-market and it ends up going down, you end up averaging down by buying more shares of Apple. Then it eventually goes back up and you sell. That would only count as one day trade, even though you bought a couple different orders of Apple stock, since it's the same security. Now that is important to note because there are restrictions on how many day trades you can have within a 5-day calendar period. Day trading also applies to short sales that cover your position on the same day. Now, why does the amount of day trades matter? According to federal SEC rules, if you make 4 or more day trades in a 5 business day period, you will be identified as a pattern day trader. So what exactly is a pattern day trader? As stated previously, a pattern day trader is one that has 4 or more day trades in a rolling 5 business day period. This excludes holidays. In addition, you can be labeled a pattern day trader if you have 2 unmet day trade calls within a 90-day period. Now, if you are classified as a pattern day trader, Fidelity and the federal SEC require a minimum equity of $25,000 in your account or more. Non-pattern day traders must have equity that exceeds $5,000 in the account to do periodic day trades. If you violate Fidelity's guidelines, your account may be restricted, or you will have to do a day trade call in which you will have 5 days to provide the required equity for day trading. So you do have to make sure that you have the certain amounts of money in your account to execute day trades. This is very important. In order to remove the pattern day trading designation, Fidelity requires you to not have a day trade for a 60-day period. It is Fidelity's and other brokers' responsibility to enforce the SEC regulations on day trading. So overall, if you want to avoid the pattern day trader minimum requirement of $25,000, you have to be very careful about the amount of day trades you have. Another aspect of day trading with Fidelity to watch out for is the good faith violation policy. A good faith violation is when you buy and sell a security before the funds are settled. The previous trade must be paid for before you sell with the new purchase. The funds must be settled in order to day trade. Usually after the sale of a security, funds will settle within 1 to 3 business days. You can check to see if your funds are settled right on the Fidelity website. In terms of day trading tools, Fidelity has Active Trader Pro software, which is a powerful platform with real-time market updates, direct and intelligent order routing, and the ability to have trailing stop orders. So some key takeaways. Overall, Fidelity is a great broker option for day trading. If you have 4 more day trades within a 5-day period, you will be labeled as a pattern day trader. If you are labeled as a pattern day trader, you have to maintain at least $25,000 in equity in your account. Fidelity also wants a non-pattern day trader to have at least $5,000 in their account if they are going to be day trading. The only way to get rid of the designation of a pattern day trader is to not day trade for 60 days. So overall, Fidelity is a great broker option for day trading. I hope you found this video useful and informative. Don't forget to subscribe. If you're looking for an Active Trader Pro or other Fidelity investments tutorials, I will put them in the description below.